Well, the exact opposite of what you thought was going to happen happened again. Yesterday, everybody thought that Tesla stock would crash after it reported earnings and the earnings call. What happened? Stock went up 10-12%. Meta, everybody thought the stock would jump after incredible earnings. What happened? Well, right now, stock is down around 12% despite a double beat. Quite strange, right? Well, one company had high expectations, or at least there were high expectations for those results. The other, not so much. We're going to dive into that report, some remarkable numbers, good and bad ones, but overall, still a great company. Just an FYI, stock is up close to 40% year to date. Since 1 year ago, stock is up 132%, so quite a performance there. And despite the rise in the stock, you can see that valuation-wise, it is quite fair. Compared to its 5-year mean, it's now probably bang on after that 12% drop. And to be honest, for a company as profitable and as fast growing right now as Meta, I think it's one heck of a deal. So I'll start with a quick comment first. It's been a good start of the year. According to Mark Zuckerberg, the new version of Meta AI with Llama 3 is another step forward towards building the world's leading AI. We're seeing healthy growth across our apps, and we continue making steady progress building the metaverse as well. So definitely did not forget about the metaverse. Now, with regards to that part of the business, well, it's Reality Labs, and well, as you guessed it, it is losing quite a lot of money still. Now, before continuing, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, we'll really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So, revenue increased 27% year over year to $36.45 billion. Cost and expenses increased just 6% year over year, so income of operations increased 91% year over year to $13.81 billion with a 38% operating margin. Net income $12.36 billion, that's up 117%. Diluted earnings per share $4.71, up 114% year over year. Now, here comes the, well, quite mind-blowing number. There are 8.1 billion people on Earth. As you can see here, family daily active people was 3.24 billion. That increased 7% year over year. So yeah, I mean, what is it? Around 40% of people on the planet use some Meta product. Quite impressive. Ad impressions delivered across the family of apps increased 20% year over year. Average price per ad increased 6% year over year. They repurchased $14.64 billion of their Class A common stock and paid a dividend worth $1.27 billion. Headcount was reduced 10% year over year. They still have cash and cash equivalents and marketable securities, $58.12 billion. Free cash flow was $12.53 billion. So yeah, I mean, quite a money printing machine. Now, the issue this quarter was basically guidance. First of all, revenue for the second quarter is a bit lower than what the market was expecting. Plus, the market was probably also expecting for them to raise guidance, so the miss is actually a bit bigger than that based on expectations. They expect revenue to be in the range of $36.5 to $39 billion. They also raised their total expenses and capex for the full year. So they expect full year 2024 total expenses to be in the range of $96 to $99 billion. That's up from the $94 to $99 billion. That's due to higher infrastructure and legal costs. For Reality Labs, they continue to expect operating losses to increase meaningfully year over year due to their ongoing product development efforts and their investment to further scale their ecosystem. By the way, more recently, they've basically opened up the operating system, the Horizon operating system. So they're really trying to be that Android to iOS here. Then with regards to CapEx, so they anticipate full year 2024 CapEx that will be in the range of $35 to $40 billion. That's an increase from the prior range of between $30 to $37 billion. So quite a nice increase there. They continue to accelerate their infrastructure investments to support their artificial intelligence roadmap. While they are not providing guidance for years beyond 2024, they expect CapEx will continue to increase next year as they invest aggressively to support their ambitious AI research and product development efforts. They said this already last quarter as well. By the way, they say here, in addition, we continue to monitor an active regulatory landscape, including the increased legal and regulatory headwinds in the EU and the United States that could significantly impact the business and the financial results. Of course, more recently with the TikTok ban, I think Meta is one of the huge beneficiaries of that happening. All right, so let's dive a little bit deeper here. Advertising this quarter came in at $35.63 billion. Family of apps revenue $36 billion. And so Reality Labs revenue just $440 million. That's obviously also an increase year over year. But if we look at Reality Labs operating loss, still a loss, $3.84 billion. Yes, lower than Q4, but that's always the case. But if we look at last year, it is a bit lower. So, I mean, I will give them that. But other than that, we should still expect them to lose quite a lot of money on that segment. I think till today, they lost, close to $30 billion on that? Maybe more? Now, since revenue and profits are increasing quite a lot, especially revenue, of course, the expenses as a percentage of revenue has come down from the weakness, let's say, era of Meta. We're now back to, let's say, normalized levels. So yes, they are basically spending a lot of money on G&A, marketing, sales, and R&D. But overall, since revenue is growing quite nicely, that's okay. Now, I do want to say something with regards to the family daily active people, because yes, it has been increasing, but there will be a point where it just can't increase that much anymore or can't decrease, period, because they have reached their total addressable market. As for the average price per app, year over year, we can see increases across the board. And then lastly here, looking at free cash flow, I mean, it's pretty clear that today Meta is back to the money printing phase compared to where it was back in 2022. Each and every quarter, free cash flow over 10, maybe close to $11 billion on average. That's quite something. And so lastly, and this is the interesting part, I put this here on the daily because on the daily we can see the huge gap up from the last earnings report, which, I mean, right now, after hours, we're right in the middle-ish to fill that gap. I mean, if we can go closer to $400 as a long-term investor, I wouldn't say no. I know that the 200-day moving average sits at $386, so that would be quite close. But in my opinion, they're probably going to explain why there is a reduction, let's say, or a slight miss in Q2 guidance. That might help the stock recover, but I think the expectations were just so high that we are seeing now a small little pullback here. And since this is on the daily, we're probably going to see RSI, if it stays like this, a minus 12% reaction. RSI is going to be quite low. If we switch to the weekly, RSI will go to around a neutral area or so, and the stock will be a bit in no man's land in between the 50 and the 200-day moving average. And so, I mean, the closer it can get to the 200-day moving average, the happier I'll be as a long-term investor. It's a pretty high, big position for me in my current portfolio. So for me to add, I'll gladly add closer to $400 because, I mean, I like the results. It's a company that is becoming more and more profitable, still growing, quite some exciting years ahead. So if I can buy it for cheaper, why not? Of course, do share your thoughts down in the comment section below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.